Tip of the day. Did you know that life insurance provides protection to your family in case something happens to you or your relative, the main bread earners in the family, that they will receive a lump sum money to the loved ones in case something happens to you, the main bread earner in the family? That's what life insurance does. It helps individual families in case of loss of earnings of the main person that's earning the income. Now, how this works is basically the person that is going to be paying the premiums is going to be, you can say, insured person. Is going to make the payments in the form of premiums to the insurance company. The insurance company then writes a contract between you that you're going to make these payments to them, and they in return will give a lump sum money for the loss of your income during the time period in case something does happen to your family. That's how that contract works. So your loss of income, anytime it can happen at any time, maybe 5 years, 10 years, maybe 20 years down the line, your loss of income impacts your family. So the company, life insurance company, will give a lump sum money to your spouse or to your relatives in a form so they, in case of your loss of income, they can survive. Now, how do these premiums work? Basically, these premiums, the company looks at in different ways. One, they need to know age, sex, what kind of occupation you're doing, or the individual that's going to be insured is doing, and what is their activity or hobbies. Are they basically, you can say, risky type people or non-risk? How's your family history in health-wise? Those things the company is going to be looking at. Now, how does it help you? Think of this way. If you get those and you're great in the thing, they even lower your premiums a bit. So you get a bonus. So you get paid less, but you can be receiving more at the end. Benefit for you. But on the other hand, if you're a risky or high risk person, your premium is going to be a little higher. Then you're going to be paying a little more for your premiums, but at the end, you're still going to get the same thing, a benefit for your family. Now, that's one part, but the thing is, there's a few different types of insurance there is. There's term insurance and the permanent insurance. Term insurance you can get starting around $20 or so, depending on your age and everything. But that's in case if you want to, you're just starting out. Most people use permanent insurance for the form because you pay less over the time period, but you receive longer period of time for the insurance and be in fact. Think this way, you're paying for about 20 years or so, your insurance, investment, premium forms of premiums, and the company's going to pay you anytime all the way to age 100. Isn't that a benefit? You're paying less only for a short period of time, but you're covered all the way to age 100. Whereas term, once you finish the term part, 10 or 20 years, it finishes, you have to renew again and get more premiums, higher premiums over another set of times. But that usually finishes around age of 80, 85, depending on companies. But it costs more that way then, but no savings in it. Whereas the permanent insurance, you have the saving part. I know a lot of people that putting in $1,000, $2,000, all the way up to $50,000 a month in order for the savings part, because they can use it because it acts like a bank account. So they have investing and tax deferred growth they're receiving, whereas outside they have to pay taxes on it. So this is tax deferred money that's growing for them. Plus, it doesn't affect their CPP or old age when they withdraw the money versus the money on the outside. another benefit. But the main thing you gotta look at, how do you want to use your life insurance for? To just for the death benefit, so you can pass something over to your next generation in case something does happen to you prematurely, or you want to use it for yourself. Grow your money, invest the money, and use the money. Main thing for you to think about. The other thing is you also have to look at what other benefits do each company provide. In term insurance, the only benefit is cheap. That's it. But in permanent insurance, you can get added benefits like will prep, funeral concierge service. You can get old age care home service. You can have other certain items that helps you while you're living. Versus the other one is on less. So that is something for you to think out what you want to receive. You want to receive less or more? I advise you sit down with an advisor. He can go through what individual companies provide and which is the best one for you. Then you can make the decision, sound decision, is which one would you prefer to use.